Hello everyone, good afternoon and welcome to today's Trading the US Open here at the Live Trade Room. So today is Monday the 3rd of September. The good news is it is the beginning of the what is effectively the new trading season. So we're just coming out the end of the summer markets. So really exciting geopolitical developments, lots of major news events currently in the pipeline. We've got midterm elections in the US. We have Brexit negotiations. We've potentially got lots of various different focus points between now and Christmas time. So we're really hopeful and looking forward to a really volatile trading period. Loads of big moves for us to look to capitalize on. So hopefully we'll have an exciting period ahead. So just to touch upon the approach really that we look to adopt in the most consistent and transparent manner possible, with a high degree of discipline in our approach, is to become a master of price action. So that's really stripping back price, really understanding exactly what's going on with these markets from a price discovery perspective. So we have an approach where we apply multi-time frame analysis to identify opportunities. Then we need to go and look to stack the odds in our favor in terms of how do we execute trades in these markets. So we shall take you through that process. And then once we're in those trades, it then becomes a strong focus in terms of managing those trades with consistency, something that most traders really struggle with. And there's a good example today, which we'll touch upon it from our trading this morning. So we'll come on to that very shortly. And what we're looking to do is to book in consistent returns and to see our account balance grow on a regular basis. So, and that's what breeds confidence. That's what instills the confidence that's necessary for traders to make money in what is a difficult environment, but obviously, of course, very lucrative, which is why so many people come into this environment. But are they prepared to adopt the skills necessary to be successful? That's the question. So that's what we're here to do, and hopefully you will find it a very useful session. So without further ado, if we could start, as we always do, with our risk warning, please do familiarize yourselves with the risks involved in trading these financial markets. Your ability to understand how much capital you have, how much you're exposing in a trade, all of this is a really important part for our traders to get a really solid understanding in terms of their exposure. Okay, so let's have a brief look at potential news flow for the session. The reason why that's important is because if we're in certain trades and we have some major news events, we want to see and be prepared for how that's going to impact the market. So it's not like we look to trade the news, but we do take on board news events. And in actual fact, this morning we had a manufacturing PMI figure out impacting the British pound at 9:30 a.m. And we have seen a negative figure, 1 point lower than the 53.9, which was forecast. So a slight deviation. It was likely to put a little bit more pressure on the British pound. Plus we have Carney. Let me bring this up on screen so you can see it. You can see the news event. Just coming up on screen. So UK plays down reports Carney to stay on as bank governor. So it was made known there over the weekend that Carney is due to leave in 2019, but for stability purposes, then there is a question mark in terms of whether he's going to extend his stay. Now, if he extends his stay, it'd be interesting to see what happens to the British pound, but I suppose this line here is quite accurate and quite apt. Pound investors face months of volatility. Potentially, we might see plunges lower. We might see some significant reversals as well. So just looking at, let me see just some of the comments here. Hi, Matt. I hope you're keeping well. Yes, so the other major issue, which is what I was just about to come on to, Matt, so you're absolutely right, is the fact that we are now trading a market without our Canadian and US friends. So the markets are going to be somewhat lighter. I suppose looking at the financial markets this morning, we were very much cherry picking the only markets that really moved to any great extent, and that was the British pound. Now this did add a little bit of momentum to that trade, but look, when we switch across now to the charts, and you're absolutely right, Matt, I mean that's going to impact the volatility behind these markets. So let's get up our trading platform, and we can see what's going on here, and it's important to just sort of see and identify what has effectively happened. So now we're edging closer to breaking this low here. We'll be interested to see how price interacts and behaves with this level. We're getting close to this level at this point down here. Now it's important to stress, so we got into this market, we effectively got into both of these markets, and we entered about this level in here. We had our stop loss just above that high, and we wanted to this market to create a bit of a structure, and it created, as you can see, a shallow structure. So what we were able to do is to follow this market down. Obviously we peaked at this low. We had a take profit about 20 pips below this level, which is why this breakout now at this level here is a bit of a concern. We are getting the move, but what we did before we finished for the session was bring our stop loss down, and what we've subsequently seen is what's called a late day reversal. Now it's not uncommon to get these, but what this particular late day reversal has done is literally shot a lot of sellers out of this trade to the downside, and now it looks like we're getting that impulse again further lower. So what we weren't prepared to do, we had our initial stop loss. If we obviously kept that stop loss, we would have been still in this trade, and a very, very profitable trade to the downside it was. But we were able to book in profit, even a small bit of profit on both of these trades. And as you can see, we've had even a technical structural failure just at this high in here before this market has now created a structural failure to the downside. So this is one of these markets where clearly bearish, but you've got to assess, and from a consistency perspective, we were hoping for more of a stronger pullback to create that structural high. We didn't really get it. So from a consistency perspective, we're quite happy with the decision we've made. Of course, the financial markets can do what they want to do. These highs could be here, they could be back up here. We really don't know. What we need to do and focus on is trading the markets consistently. So it just remains to be seen what else is left in the pound dollar to the downside, and I'm going to show you the gap to the downside in a minute, and you can effectively make up your own minds. But we are now breaking down to these levels, and there's potential support in and around this level down here. So it doesn't necessarily give us the risk reward as things currently stand. But we will look at this level quite closely and see how price behaves around this level. But we are very likely to come across some continued support at these prices, and in fact we're seeing quite a strong rejection even as we're looking at this. So I suppose this plays into the fact that the markets are generally lighter, which means that there is a number of participants in this environment that may be looking to manipulate price to clear traders like you and us out of these markets, and that's why it's important that we're really proactive with our risk management. So these are one of these trades where we've clearly got the correct analysis. We've applied our approach, certainly from a risk management perspective, consistently with discipline, and we experienced a really strong late session reversal. So be it, these things happen. Sometimes you get really strong continuation, you don't get the reversal, but it's important for us not to chop and change our approach to risk management. We keep it clearly consistent, and on other occasions you'll see the market continue to roll and tick lower, and under situations like that we'd be able to book in consistent returns. So a good trade. It was worth trading. We like we said, we mitigated the risk. and now we're getting the second impulse to the downside during the US Open. So we'll see how much follow through we will experience during the US Open, bearing in mind, as Matt said, we don't have any US traders trading these markets today, and Canadians, which is worth pointing out as well. So it's going to be considerably lighter, but there's a bit of fundamental developments regarding the British pound as well with regards to Mark Carney, and we'll see if an opportunity presents itself with these pound pairs. In addition, it's worth identifying that we also were interested in selling the euro dollar below the 15.84 and selling the euro yen below the 128.55, but very clearly those trades no longer became high probability trades. As you can see, we got a break of this descending level, and that became a level of support. But we're not really interested in buying these two markets as things stand. Major reason for that, we look at the daily time frame and we want to go with the market. So we're looking for this price to roll over. So tomorrow it might give us a nice opportunity. We just need to be very, very patient and wait for the high probability to arise and not get in and out of these choppy markets right now. So we just want a little bit more clarity than what we're experiencing. So that is still the level for us to consider, the 15.84. And we're only sort of 20 odd pips away from that level. So it's not like we're not going to see that level. We just need to be patient and wait for it. Okay, so in addition, let's look through the remaining markets, and it's important to stress that we look at daily time frames to get a proper understanding in terms of what's happening. There's a bit of strength coming in to the dollar now against the yen. Not much had been happening all morning. It was very much consolidating and just this sideways moving price action. And now there's a bit of strength coming in to the dollar yen. The dollar Swiss threatening to push higher, but again, the range between the high and the low, we're still talking about 20 odd pips. So nothing of any major concern. Wouldn't be surprised that off Friday's pullback to sort of see a bit of strength come into the dollar against the Swiss. But as you can see, not much of a move there. And the CAD is strengthening, the dollar is strengthening against the CAD, as you can see. The Aussie dollar, ironically, there's strength coming into the Aussie dollar, even though if we look at we had a negative retail sales figure, so we've had negative news, but ultimately, initially negative price action, but then we've had a complete turnaround. Not quite the same situation regarding the New Zealand dollar. We'd still expect this market to continue lower, but as you can see, the volume has come right out of the market. So again, if we look at the range from high to low, we are talking about a 20 odd pip range in today's market, so really not worth focusing on in any great extent. Yeah, hi Connor. Yeah, still a great trade. Yeah, it definitely has potential. We were, the only thing we were looking at this morning was pound weakness, so they still stack up as really interesting trades. The only concern we have now, if we do break these lows, is how much more are we going to see in this market. So the problem we have is we've got a nice strong move down to these lows. We had a stop loss about a 142, our take profit around the 142.60 level. And as you can see, we kind of paused there around the 142.80 level. So we were 20 pips away from taking profit on that trade. And there's no hard luck stories when you trade these financial markets. It is more about a focus on consistency, and you're going to get loads of opportunities where those trades fall into place, and you'll get other opportunities when they won't. But to just, I suppose, touch upon opportunity missed or regret, which are really important emotions that a trader needs to deal with. We'd rather you focus on slightly different things than suggesting, look, we got our analysis right, we unfortunately experienced a pretty significant sort of strong pullback in the latter part of the trading session. Instead of sort of saying, oh, that's a real shame, and living with the regret of those trades, it's actually the wrong focus. What we need to be doing is to be pleased that we are effectively managing and control that risk, because it just so happens in hindsight we can see, yeah, okay, if we got into this market and we kept our stop loss and we exposed the capital, then of course in hindsight we would have been better off. That is absolutely the case. However, what we're looking to do on a consistent basis, and I might just show you on this chart just to show you, is that from a psychological perspective, if you have a trading approach that let me just put this up on screen quickly, and I'll just explain. Okay, and last one. It's not easy writing with this. So I'm sure some of you are familiar with this already. However, if you have a trading approach which, oops, I should have put winning into this box. So if you have a trading approach where you know you're going to, on occasion and probably a reasonable amount of time, you will incur small losses, and they'll be offset by generally small winners. So whether those come and go, those don't really, if you manage your risk effectively, that's going to be the reality. You're going to look for opportunities to mitigate risk as quickly as possible. You might take a few small losses, especially if a market isn't performing as you would expect it to. Then ordinarily you're just really looking to get out of that trade. So occasionally you might experience small losses. On a few occasions, on quite a number of occasions, you might experience small wins. And generally over like 100, 200, 500 trades, those generally level themselves out. Might be a little bit weighted in one side or the other, but really that shouldn't be the focus. So this should just be accepted as the normal runs of trading these financial markets. Now, what we need to do is, with our disciplined risk management approach, we're going to make sure that we never take a big loss. So you'll never see a 3, 5, 10% devaluation of our trading account. The reason being is we refuse to take big losses, and I can't tell you how important that is to adopt that as a consistent approach. Avoid taking losses. There's a famous quote by Warren Buffett, which was, when you invest in the financial markets, it's important to remember rule number 1, which is don't lose, and rule number 2 is don't forget rule number 1. So really what he was looking to do is to mitigate risk as quickly as he possibly could do. I'm just keeping one eye on the pound dollar just down here, seeing this little move. So and I suppose in my own trading career, that took a couple of years for it to sort of sink in and to make any sense whatsoever. So what he's doing is, if you apply in your approach where you have a system where whatever happens, you don't take big losses, you don't open up your account to things like margin calls and things like that, because if that's happening, you're doing something very, very badly wrong, and we'd really recommend you to perhaps come and join us on a permanent basis, because we will put you right on that. So any trader that experience margin calls are literally gamblers, because they're very frivolous with their risk. They don't really control and understand what's going on with the trades they're in. It's like going into the casino and adopting a gambler's approach to trading these markets, and that's not what consistently profitable traders do. So what we do is we make sure that we never take big losses. So again, we revert back to taking a significant number of small losses, but they don't bother us, because what we're left with then from a trading perspective is, if you adopt an approach that allows you to let your winners run, which is what we were looking to do today. Markets move in this fashion, especially a trending market to the downside, and we were looking to let the market move and look to book in profits. Now it just so happens one of these pullbacks, created a bit of a structural failure back to the upside. That for us is almost besides the point. That is just choppy price action. That's going to produce either a small loss or a small winner. But what we're looking to trade, and where you will see your account balance grow exponentially, is if you adopt an approach that allows to let your winners run. Because if you don't allow to experience big losses, you really are stacking the odds in your favor in a pretty significant manner. And that's what you'll benefit from us. That's what hopefully those of you that are serious about making consistent returns, you'll see this play out in reality. So it's not just a buzzword, or it's not just a sort of a clever image to put up on screen. You'll see us live that approach in real terms. So hopefully a good experience in the pipeline for you all. So we can see that this market is being held up at the 28.68, the 28.63, sorry, should I say. And we do want to look through the rest of the market. So I think I was up to the New Zealand, if I remember rightly, and a little bit of indecision here, not really sure which way for this market to move. Some really strong strength coming in against the pound for the euro. Yeah, it's just kind of sort of a little bit supportive of this kind of price action. And ironically, at this low was actually a break to the downside. So now we're getting a really strong reversal. But now a break above the 90.98 is now in focus. So it's important to note what the market conditions are for this market, and that is very much moving sideways. So we're going to sort of step off and just back off this market over the shorter term. Euro yen, what we've seen the breakout. We were expecting this market to move lower. We've seen the strong breakout. So we've really had a bit of a strong European day today in the end. So right now we're not interested in buying European strength just yet. We need to see a lot more happen in these markets. But this low in here could become a bit of a strong barrier for the pound yen. So we'll have to wait and see on that one. Not much is going on really over the course of the day in the gold market. No major surprise, because we're not getting strong moves in the dollar to any great extent. A little bit of dollar strength, but not an awful lot. So again, it's very difficult to identify opportunities, and certainly the commodities, especially with the lack of volume in today's trading markets, and it's likely to play out as well in the US equities. So indecision about at these kind of highs. So we've had the pound selling off, the British pound, so we've seen a bit of bullish price action coming in the FTSE market, and that's just continuing the, let's say, the constant choppy sort of price action that we're kind of seeing in front of us. So really a horrible market to trade. So we need to wait for some of these markets to just work themselves out, either get themselves into a bullish trend or a bearish trend, and that will really help us. A bit of strength coming into the UK oil market, and this is the US oil market. So you can see we're not really seeing, US oil. So we're not seeing the same bullish market as we are in the Brent, which is the UK oil market. But we are running into this descending level. That's effectively where we're at, and it's provided a little bit of resistance so far. So let's see how this market reacts. And I'm not sure who was, let me remember, it was Shane, I think. I don't know if you're online today, Shane, or not, but do say hello if you are. Good strong trade call to the downside for the pound Swiss. The pound really sold off today. The only problem we had was with the actual technical setup at this level. And as you can see, it's pushing down now to the 24.75. We had even a gap lower when the market opened up, ironically. So that in itself is a little bit more bearish. But we had this last week, which is, it's a shame because I suppose the better trade was actually on the Thursday to sell this market rather than this morning or last night. However, we've seen the continuation to the downside, although from a consistent sort of entry and exit perspective and stop loss placement, it didn't really give us an optimum entry. It was a bit clouded in terms of this bullish engulfing candlestick. So it gave us an issue as well to the downside in terms of risk reward to the downside. So that's the pound Swiss then. So as we go through these markets, we're still left effectively looking at the pound dollar to the downside, and we're getting some continuation. We do have a little bit of a problem with the pound dollar, so we'll have a look at that, come back to that shortly. What we might do is just focus on these two markets now. So we're getting a bit of selling coming into the pound and the yen. So now we have a bit of an issue in terms of the actual move to the downside. So when we look at this, we've had a really strong day and we're now approaching these lows just in here. Let me take some of these levels off. So it's interesting to see the gap here. We've had a really strong move lower, but we're very likely to see a bit of resistance start to kick in around the 28.50 level, and we're only just a few pips off that level as things stand. So from a high probability perspective, again, trying to be as consistent with our approach doesn't necessarily give us a fantastic opportunity. At these prices, you know, 40-50 pips higher than it absolutely did. We'll just add an average true range. So on a daily time frame, so you can see the volatility just picking up a little bit. But ordinarily, we over the last 20 days, and the fact that that is over the summer markets perhaps isn't the best indicator. But we've seen an 89 pip move on a daily range, and the high of this market is 29.39 and the low is the 28.54. So that's about 85 pip move. So we've already effectively achieved the ATR. So that's why there's potential for this market to strengthen a little bit at these lows, with a bit of support and resistance kicking in. So it just doesn't necessarily give us the risk reward to the downside. And it was that gap down to the downside that we weren't able to close effectively until we got the gap. So with the news event, it was always going to be a difficult market to trade. See, we didn't even get the pullback to the previous level. You know, we kind of stopped at these highs, which could give you another opportunity to get in at these highs. So I suppose this is where you really want the markets to conform to your trade plan. And if that doesn't happen, then we very well may be you know, needing to apply a little bit of patience really. to some of these moves. So we're struggling to break these lows here in the pound yen, the 142.84, and we are currently below the 28.65 level in the pound dollar. So correct analysis, correct entry. I think from a consistency perspective, it's important to mitigate risk as quickly as you can. And then we started to get some choppy price action. So we can't really do much about the choppy price action or the really strong late session reversals. Those are part and parcel. Sometimes you get strong reversals, sometimes you don't. So we need to be consistent within that as best we can. Okay, so we're looking at these. If you guys have any other markets you're interested in or you're looking at, don't hesitate to post them into the chat box. We'd be happy to have a look at them. There's some bearish price action coming in to the pound dollar. Would really like to see how this price interacts with the 28.50 level, which is just 6 pips below these current prices. Which is 28.50 level. And this market here needs to break down to the 142.84. So we really wanted to be in these markets down at these levels where we're looking to take profit at these levels down here. And we're still 20 pips away in the pound yen. So we've got the extra complexity, just the fact that it's a bank holiday again in the US and Canada. So these markets are trading without US significant capital involved. So you can see a little bit of an uptick in let me show you. So you can see a little bit of an uptick in the ATR, and that just means that there's more volume coming into these markets. And we'll be able to capitalize on bigger moves with more volatility coming in. So as markets are coming back to normal, where we will hopefully get some significant levels of volatility, that's what presents opportunities to us as traders, and that's what we look to trade. So it was a straightforward opportunity to look to sell these two markets today. Seems to be the only real market that seems to be moving with any particular purpose. So looking at the euro pound, we're just getting really strong price action against the pound. So really every indication was telling us to look for opportunities for pound weakness. So that's what we were looking to do. So Matt, you're saying at the minute you're watching gold as we're hovering around the 1200 level. Yeah, absolutely, Matt. Are you looking for an opportunity to sell it? Like we could be looking to sell this market, but it would actually be a structural failure and a breakout of this level to the upside, but above the 12-16 level. So maybe you're looking for that rollover trade to the downside. That trade down here, that's what we're looking for. Certainly we're looking for it on our daily time frames as well. Yeah, so Connor, you're suggesting the Aussie New Zealand. Let me just have a quick look. So we're seeing some Aussie strength today. And we're seeing a little bit of New Zealand strength, but not as much as Aussie strength. So if you're looking to, if you're looking for New Zealand strength in the Aussie New Zealand, then you'd be obviously looking for the Aussie New Zealand to move to the downside. The problem is we've got contradicting charts against the dollar. So if anything, this market is very likely to give us opportunities to the downside. Now I haven't seen the chart, so I don't know, but it looks like today actually price action is probably going to be ticking to the upside. But let's go in and have a look at this. So there's that sort of structural failure. Price is pushing a little bit higher. Yeah, the potential here for a bit of a bullish engulfing candlestick, and that's just off the analysis against the US dollar. So that's the one thing both of those markets have in common. So what I would agree with you would be to sell this market below the 0836. It's just now we are considerably higher in this market. Let's see how significant this level is. Yeah, it's quite significant, isn't it? You can see that, preventing prices from pushing higher and lower on many occasions. So it is a really strong level to buy this market from. And the problem you have now is that we could start seeing a little bit of a bounce even higher in these markets. So so definitely apply a little bit of caution, but below that level it would really stack up, and hopefully it just gets a little push higher before maybe then creating that little bit of move lower. So you might even get an opportunity to get into this at a higher price if your bias is to the downside. Yeah, did you meant to put Aussie strength, did you? Rather than New Zealand strength? Because that would certainly make a little bit more sense. Yeah. So that makes much more sense. So you're looking to buy the Aussie New Zealand, potentially could be a good shout, and sell the New Zealand Swiss. Yeah. So that all sounds much better. So yeah, it could be a good trade to the upside, and New Zealand Swiss as well. Let's have a look at this for you. Oops, excuse me. Right, there we go. Nice clean price action, just so that we can see what's going on. Okay, so the major move was obviously after 67.09. Let's see a bit of support coming around this level. Okay, so let's zoom in now. So you can see the breakout there a few days ago last week, and a bit of buying coming in today. Again, when we're trading support, strength and weaknesses in any foreign exchange pair, it can be useful to conduct a little bit of strength and weakness analysis. So for this, we can see very simply that we've effectively got a bit of a doji candlestick here in the New Zealand dollar. So neither the New Zealand AU dollar or the dollar are they're kind of as strong as each other, so there's very little movement. But when we look at the dollar Swiss, we can see that actually the dollar has just been strengthening a little bit over the Swiss, but not very much. Very marginal differences between the potential weakness in the Swiss against the dollar as opposed to sort of neutral price action there. So what we're saying is for the day, and it might only be for today, that there's marginal New Zealand strength over Swiss strength. So if you take that into the New Zealand Swiss, you would expect to see this little bit of a bounce off this market, and that's a really good indication really for the analysis. So we could do that analysis, go into this market and suggest, right, well, of course that, we're likely to see this price just push higher, and I suppose the fact that this is a small move is quite representative of the little difference between the dollar Swiss and the New Zealand dollar. So yeah, so the New Zealand to the upside on the bounce, it's just a counter trend trade. So as long as you know that that's the case, and you could get the full weight of sellers coming against you pretty quickly, as long as you know that, then that's absolutely fine, Connor. That can stack up. We'd love it to just push a little bit further lower if we possibly could to get the bounce, but it's just bouncing just slightly above those levels. So so it's sitting at a TL at present. You mean like a round number? Like the 6400, you mean? Do remind me, Connor, actually, a TL. So it's sitting at a TL. I hope I'm not being silly at this stage, but so you're looking to buy it. So there's an argument to look for. I mean, we would certainly prefer to buy it above today's high. So if we get this candlestick tomorrow, and we start getting some bullish price action creep in, then we're likely to get into it above the daily high. Okay, so it's sitting at a trend line at present. Okay. Yeah, that's a pretty good shout. So so that can be added to your analysis, of course. And we also have the 6400. So if we talk about this as a channel, downward moving channel, potential nice bounce from that level. So from a technical perspective, Connor really stacks up. Could be an interesting trade. We're very likely to get a little bit of resistance around the 65.14 level, so bear that in mind. But you've got a really strong, nice risk reward. And we just like to see follow through from that tomorrow, really. So we'll keep an eye on this trade and see if the opportunity exists there or not. Yeah, great analysis, good spot. We're in around the 9400, sorry, the 6400 level. A bit of a channel to the downside. You're just buying a market that's moving to the downside. So it looks nicely on a weekly as well. I'm sure it does. Yeah. So could even sort of work with that kind of channel in there. So look, absolutely stacks up. The only thing is, it's just a counter trend trade. So as long as you bear that in mind and you build that into your risk profile and your approach and your returns, then absolutely a great trade potentially. Obviously, the problem you have if the Swiss has been strong and you have all these sellers looking for multiple opportunities to sell, you can often run into a lot of resistance as the New Zealand is trying to claw its way back. So so what you often get, the bigger moves, is if you're in a downtrend, look for opportunities to sell the highs rather than buy the lows. So that would just be something that we would look to focus on, is selling the highs and not so much buying the lows. But saying that, it can give you a really nice concise entry, and you could probably remove risk really quickly on the trade. So definitely a viable option for sure. So this price is, we've got the low here. Let me just take the actual low at the 28.63, and we're only 5 pips below it as things currently stand. So let's see if we get strong continuation lower or not. So it looks like this market clearly wants to move lower, and there's plenty more volatility to the downside. Yeah, good. So you've taken it with a much smaller trade size. Yeah, no, that's a good logical approach. You know, if you're counter trend, maybe don't be as aggressive with the market from a trade size and a capital perspective, but to just take the trade size off and trade counter trend moves. Yeah, absolutely. So we shall see how we get on with these now. As you can see, we don't have any other news events for the day. Okay. So I'm very curious to see how this price behaves around these levels, in and around the 1250 level, sorry, the 2850 level. So at the moment we're kind of struggling to break it to the downside, but if that happens, it might present an opportunity. But then we've got the 1250 just below it, so interesting to see how price behaves around these levels. So we'll continue to monitor this trade. So I'm just conscious, guys, that we've got other traders over at the live trade room, so we're actually going to switch across. Please do have a look at the description below. Please do take us up on the fact that we're currently offering a 14-day free trial. And if you decide to come and join us and join our live trade rooms every day, you can pay as little as $9.99 per calendar month. So that's currently available. Read the information below and do feel free to join us, and you'll get full access pretty quickly. We could set you up with access to our live trade room this afternoon. And we do run over 74 live trade rooms every month now. So really a great time to join us. And like we said, we want to be probably the most affordable trading educator out there, so you can really taste sort of trading and hopefully build a skill set necessary to be consistently profitable without the need to obviously pay significant fees to be able to do so. So we do hope that this will represent excellent value for you. So do read the information below. The link is there, and do click on it, and you're very welcome to join us. So unfortunately, we do need to switch across to the live trade room, guys. So thank you as always for joining us. We hope to see you next time. We'll be back again on YouTube at 8 AM tomorrow morning to see if we can get into more trades like the pound, which we've seen today. So we've got to trade what we see and kind of use a little bit of an experience. We weren't overly surprised with a sort of a late day reversal during lighter markets. It's kind of, it's one of those situations where you kind of just accept it, really. There's no point dwelling on it, because what's important for us is to make sure that we're consistent with our decision making, and as long as we can do that, we stand a fantastic opportunity to make consistent returns when we trade. So thank you very much for joining us, guys. Do take care. We look forward to seeing you next time. So from everyone here, if I finish this presentation, you can connect with us. Obviously, please do subscribe to the YouTube channel and like, and use the bell function as well, so you'll be notified when we go live. Just search the live trade room if you need to access us next time. Then in addition, you can join us through Facebook, Instagram, Twitter and LinkedIn. The details are all there up on screen. And that just about concludes today's trading, the US Open live through our YouTube channel. So thank you very much as always for joining us. Hopefully you can join us through at the live trade room as well. Do join us, 14 days free, no obligation, no contract, no obligations of any kind. So it's just pure access to trading education. So we hope it'll help you. Okay, so listen, on that note, thank you very much for joining us, guys. Do take care. We look forward to seeing you soon. From everyone here, bye for now.